Hi friends and family, this is Sean Kelly over at RWM Home Loans. I'm working together with Jack and Nicole at Classic Home Improvements. They've asked me to tell you a few things about how a construction loan might work and might help you finance that dream project or the dream house that you have. So basically, there's 4 different ways to structure financing. There's actually 40 different ways to do it, but big picture wise, let's try to work it with 4. You can start off with cash in pocket. If you got some money in hand, that's probably a great way to go, and maybe team that up with an equity line on your existing house. That works really well if you got a smaller project, maybe $25,000 to $75,000, or depending how big that wallet of yours is and how big that bank account is. It's always better if you can do it cash, then you don't have to pay interest to the banks. But if you do need to pay interest to the banks and you're taking on maybe a bigger project, maybe $75,000 to $500,000, a lot of times what we'll do if you have equity in your house is we might come in with a new first and refi whatever existing financing you have, and then tandem that with an equity line. And we can do that up to about 90% of your current home value. So for example, say if you're going to do a $200,000, $250,000 whole house remodel. In that scenario, if you've got, say, $400,000 or $500,000 equity in your house, we may come in and put a $500,000 or $600,000 loan on your current property and then maybe another $100,000 or $200,000 equity line. That's a really good way to be able to manage the project and have flexibility in your payments, as well as also a loan at the very end of the process so you don't have to go refi. The third way to go is kind of more specific. It's more $75,000 to $300,000. It's called the Home Ready Construction. It's actually a Fannie Mae project. And this particular program works only up to a $700,000 loan max here in San Diego County, but it works well if you don't have a lot of equity in your house, but you're trying to add like a room, or you're trying to put maybe a master bedroom addition or a family room addition, adding square footage to it. We can go off of 95% of the finished value based upon what they call the Fannie Mae Home Ready Construction Project. There is fund control, and there are higher costs involved, and the rates tend to be higher than a straight refinance. You also need plans, permits, and a general contractor contract, and the general contractor needs to be vetted. The last option that we usually work with is a full construction takeout loan. And that's usually from $250,000 to up to even $3 million are these loans. And we work with several banks in the area, usually more local banks that do these. They typically are 75% to 80% of final value. So if we get an appraisal, and the appraisal comes in, say, at $1 million, then you could do a loan up to $800,000. Normally, we see basically the lot is being purchased outright, or the property is demoed and we're starting it up from ground up. You do need fund control, you do need plans, permits, and a general contractor to do this. It's very difficult to do it owner-builder if you're not a general contractor. You used to be able to do that, but now you need a really good general contractor, just like Jack and Nicole over Classic Home Improvements. So give me a call if you need any more information on this, and we can customize a construction loan option for you based upon what best fits your needs. Sean Kelly, RWM Home Loans. Take care.